Hey, what's up guys? My name is Katon and you're watching the Minute Mortgage Show. Hey guys, I hope you guys are having a fantastic day. Wanted to give you guys a few more tips and tricks to really hack away at your mortgage. So here's 3 ways that I really think are a fantastic way to hack at your mortgage and pay it off a lot faster. All right, tip number 1. Obviously the biggest thing when you're talking about beating your mortgage is you're trying to pay it off as soon as possible. So one of the fastest ways to do this, in my opinion, is actually by taking cash out. Now, it sounds counterintuitive, but let me explain. Most of us don't just have a mortgage. We have, your auto payments, our credit cards, some installment loans, things like that. So by taking cash out of your mortgage and using it to pay off those debts, you actually free up a lot more cash flow on a monthly basis. And by doing so, you can take that money that you're saving, that you're not paying on those high interest bills, and throw it back into your mortgage and accelerate the rate at which you pay that thing off. Tip number 2. Another fantastic way to get your mortgage paid off as quickly as possible is by setting yourself up on what's called a bi-weekly payment plan. Now what this does is it cuts your mortgage payment in half, and instead of paying it once a month, you pay it every other week. Now this is a really cool way of doing it and managing your finances because number 1, it helps you stay up on top of your mortgage bill, but 2, it actually ends up giving you an extra mortgage payment every single year. So effectively what you're doing is you're actually taking a 30-year mortgage and turning it into almost a 27, sometimes a 26-year mortgage, depending on what your balance looks like and what your interest rate is. All right, and last but not least, the 3rd way that you can hack your mortgage is probably my favorite way, and it's by getting what's called the 5x5 adjustable rate mortgage, or ARM. Now you might be saying, whoa, I don't want an adjustable rate mortgage. I've heard those things were scary. My interest rate can soar, and how am I ever going to pay for my mortgage? It's not true so much today as it used to be. There's a lot of rules when it comes to ARMs, and I think the 5-5 mortgage is probably the best way that you can balance, the flexibility of a low interest rate in that ARM, while also keeping it really low and giving yourself a little bit of flexibility. So let me explain how that works. So the 5x5 ARM basically is fixed for 5 years and can adjust every 5 years. This helps you hedge against the market since typically economic cycles go in about 5-year spans, but also gives you the flexibility since most homeowners today aren't really staying in their homes for the full 30 years that you're in there. Most of them are selling within those 5, maybe 10 years. So this kind of gives you some options. You can reevaluate your financial situation at the 5-year mark, figure out whether or not you want to sell the home or if you want to keep it for another 5 before you move on. But having that low interest rate and that low payment is going to free up a lot more cash flow for you, as well as help you pay that home off a lot faster. All right, and that's it for this week's episode. I hope you enjoyed it. If you have any questions, comments, make sure to drop a line in the comment section below. If you like this page, if you want to see more of it, hit that subscribe button, hit that like button. Make sure you guys follow me on all social media platforms at Minute Mortgage. First one in, last one out. Have a great week, everyone.